Hi guys, welcome back to another video. So today we are looking at DYDX. The reason I wanted to cover this is because it is a pretty interesting project and it does have some problems as of now which I think we need to address before uh, to clear the confusion around the divide and DX because it has been doing extremely well when it comes to their stats. As you can see, we have a pretty good volume on their exchange. This is basically derivative trading. So as you can see, we have over 274 million for the non-custodial trading, which is pretty high, and its token should do good, but it's not doing that good. So I wanted to talk about that as well. So before we get into that, we need to look at the token itself. So as of now, this is their current token, which is DYDX. Before that, their token was on Ethereum, and they have been going through the migration, as you can see. So its max supply is around 1 billion, and as of now, its recommended supply is around 464 million, and it should increase because the remaining supply is in the ETH. And as we see, it is around 295 million. So the migration is as of now happening, so the supply should be around, when the migration is done, the supply should be around 6 million, so still pretty good supply, but it does have a lot of demand, and we'll discuss that in a bit. So the reason was that the community decided to adopt DYDX as a layer 1 token was that because it has a expanded utility now. Users can actually stake their DYDX token and get all the fees from their platform. And as you may already know, the platform is getting a lot of fees from the takers and makers fee from this one, and all of them are given to the stakers, which is a pretty big utility for DYDX coin. And I think this is the reason it will be pretty big in the future as well. So as of now, we have staking rewards around 20%, and because I think this is big, most likely because we don't have that many stakers as of now, and as we see many stakers coming into it, I think we'll have this APR will most likely reduce, but still it is a pretty good utility. So if we do look at the fees, as you can see, the fees have been pretty good still, and all of these fees are going to the stakers, which is pretty awesome for the stakers as well. So the problem with this token as of now is that there are actually token unlocks of investors and founders and employees, as you can see, and future employees. So as of now, we have a daily investors taking around 18 we have investors taking around 18 million coins on a monthly level, as you can see, this month, in the next one, in the next one, in the next one. And it can also be seen in the price action. So if we do look here, the last time we had around on the 6th March, and before that we had it around Feb of 6th, and before that we had around Jan of 3rd. So as you can see, if we do look at this price action on the March 3rd, if you do look here, the price actually went up, and I think that maybe the investors actually pumping the coin and eventually dumping it when it went up, and probably selling their tokens. As you can see here, it went down as well. So this same pattern has been around, I believe, we also had the vesting at this day around Jan of 3rd or Jan of 2nd, and as you can see, the price did went down. So we have a pretty big actually vesting coming in 2 days, and I think the price will most likely go up as of now and dump once it hits a slightly higher high. So I think the pattern will continue on until the investor get the most of the coins. But still, I think the demand for the DYDX is increasing because of their staking and their utility, which is pretty big. So it's a layer 1 coin now, so that means it is also used for fees, for gas fee as well, so that is pretty big. So in terms of investors, the problem is that we do have some investors which are bankrupt already. So if you do look at their series B, we have a big investors, 3 Arrow Capital, and if you do not know, they are actually bankrupt. And after that, in this round as well, we also have a 3 Arrow Capital. So I think the biggest seller could be the 3 Arrow Capital, because they are bankrupt, so they may be selling their tokens, or they may already have so they may already have sold their stake. We never know, but I think you have to be extremely careful if you are holding this coin as well. So I think this coin is a pretty good one for a long hold because of its demand, and it is the biggest one derivative trading or decentralized exchange when it comes to trading. So I think it will have a lot of demand in the future, as we actually cannot trust centralized exchanges. So I think this is one of the main platform where the most of the users will actually come to trade in the future. So I think that is a pretty big for this coin as well. So another thing is that we also have a TVL. As you can see, this big and TVL is coming from their layer 1 solution, which is pretty good. So in terms of other thing, let's just see if I missed anything or not. So the migration is still happening, as you can see here, which is pretty big. So let's just talk about price and where I think the price where we can actually enter the market. So I think one of the best entries we have is still around, if we do go to the, I think we do have a good support around $2.4. It is pretty far away, but I think this is one of the better entry, and I think if we do place an order, we will be able to get a sniper entry here, which is pretty awesome. So in terms of its price, as you can see here, it has been in the uptrend ever since, I believe, ever since from its low around $1. The low has been a lot lower, but I think it may go up eventually because of its increasing utility. So but it does have a good resistance around here. So I think we need to break the if it wants to go up, I think we need to break this resistance, and it may happen if we do see a lot of stakers coming in and staking the token. So I think it will happen, but we may need to wait a little bit because the migration is still happening. So in term as for its price prediction, the good thing about this coin is that it is built on top of Cosmos SDK, but the difference is that it does not have any built-in inflation. Built-in inflation, because it does not have a max supply, or it does have a max supply. So that means it has a zero inflation when it comes to its long-term holding. And if you look at other coins such as Cosmo or Atom and others, most of them have a inflation built in. So this is a pretty good. And the difference between another difference is that it has a reliable source of income for the stakers and validators, which is coming from their trading fees, so which is pretty good, and I think that will most likely pump the coin in the long run. So this was it. I hope you like the update. I will be back with more. Thanks for watching.